Good morning, everybody. Welcome to the Flow Show. Nearly the weekend. We're nearly there. I can't wait. It feels like Friday today anyway. And just got the Bank of England financial stability report coming out. Bailey is due to speak, but it will all be about financial stability. So anything monetary policy-wise is likely to be where their current stance is, not what's happening in the future. So just keep your eyes on that. Morning, Kate. I'm going to leave you to cover Bailey, I think, for that one.
Good morning, Ryan. I just need to go and do something right while he speaks. I'm sorry about it, mate. I won't be able to cover Bailey.
Okay. Anyone of our viewers want to cover Bailey? You're welcome to it anyway. That's the last thing you need on a Thursday is Mr. Andrew Bailey waffling on. Right, let's get into it. We will swing by China as we often do. Another fix midpoint going higher by 22 pips to 712.70 from 712.48. Continue to go higher. Dollar China still floating around. Had a little nosy into 730 yesterday. Couldn't hold it. Still holding up there. I'm still thinking that some of this might be a bit of month-end stuff, but still going the right way for us longs. China's Communist Party will hold their third plenum July 15th to 18th. So that's a date for the diary when we get a load of waffle out about what they're going to do with policy, the economy, and everything else in between. Over in Japan, we had a bit of data coming out overnight, retail sales data from the large retailers. Retail sales for May up 1.7%, nice and healthy looking. Year on year up 4%. That's the large retailers. The main retail sales year on year up 3%, beating expectations. So again, we're seeing this bounce back in the new quarter. Compared to the crap show that we saw in Q1. Again, something that the BOJ and the rest will look through that early data and focus on what's coming now. So that's all seems to be moving in the right direction. Department store and supermarket sales were also up 4.1% versus 2.7%. So it's looking good there. The Japanese government issued its monthly economic bulletin saying the economy is in moderate recovery, although it appears to be pausing recently. Overall, it maintained the same view, and that view has been maintained for the last 5 months. Right, yesterday we had Mr. Kanda up very late, 10 o'clock Tokyo time. He was speaking, said he's seriously concerned about the recent rapid weakness in the yen and will take necessary action in excessive moves. Said the recent yen moves are rapid, and also said believes the majority view is that yen weakness is viewed as a speculative move, and that the current weakness of the yen is not justified. So he's pretty much gone through word bingo there in terms of the DEFCON levels on all of it. However, apparently he declined to call these current moves excessive. I don't know if that was a translation thing, but that was a little bit of a step back, shall we say, in all those comments. We've had Suzuki and Hayashi from the government speaking as well. Usual waffle, no real step up there in rhetoric. And we've just had the Deputy Governor of the BOJ, Uchida, saying that the weak yen is an upward factor for prices and they're closely monitoring those in conducting monetary policy. Now, yesterday when Mr. Kanda spoke, let's go into a short-term chart, we had that little wobble there. It lasted about 5 minutes and then we went and busted new highs up towards 161. So comments now falling on deaf ears. I think we are well in intervention mode right now. Whether that gets the market a little bit more nervous, but we should expect perhaps to see some of these types of wobbles, and that one we got on Monday out of nowhere. So just be careful if you are long yen pairs. you know, it takes a little bit of nervousness, someone to hit a button, and you get a bit of a cascade. And we also might get rate checks and potential intervention as well. So we're playing that game again, all over again. Kay, your thoughts, mate?
Well, I think Kanda, yeah, he filled up the bingo card, and then I dropped the card for some reason, I don't know why, and all my buttons fell off it. But yeah, we are definitely in intervention risk. But then, are they going, or are they going to do some PCE kind of thing tomorrow? We also have the Tokyo CPI out tomorrow. But we're still in this mode. How many times have we said that? It's just very little use to stand in front of it for as long as it goes. Of course, you can go long yen, but then it's a pure bet on interventions right now, because we are still a month away from the next Bank of Japan meeting. I'm just repeating what I said. I mean, I expect speculative. On the other side, speculators to go to the other side into the next Bank of Japan, but that's still a month away. So unless we get interventions, if you're long yen, it hurts a bit. Yen crosses are still pushing on. Euro yen back comfortably above 171. Sterling yen is even higher too. Oh yeah, there it is. 203 already. Yeah, and the problem is, if you don't have the position, it's too high to enter, and it's too dangerous to stand in front unless you have deep pockets and take very tiny positions, hoping that they intervene soon. Could be one for tomorrow. Now we have to remind ourselves though that we could have and conditionally, okay, we could have a little bit of activity for their first quarter end over their last fixing tomorrow. So whether it's the exporters or importers needing to press some buttons still. So be careful what's happening in the next night in on the Tokyo fixing, because that will be just after that Tokyo inflation release. So be a bit careful for could be a bit of a wobbly night there, and then of course we will have the last fixing of the of the month, quarter, and half year elsewhere, which also could see a bit of dollar flows coming in. So it may get a little because for the time being, if you look at really take away those blips that we have, rate checking or warnings, it's been extremely very, very gradual and thorough weakness of the yen. So yeah, tomorrow could be a bit different.
Yeah, do you think they'll take the end of month into account? Because also they might have a half an idea what their corporates might be getting up to. If the corporates say, yeah, don't worry about it at the moment because we're doing all right, rebalancing or bringing back profits, might they wait till after the turn of the month?
Well, they will know what they have to do, because everybody keeps them informed. It's Japan.
Yeah.
But
As
if
long
they would,
as there's no real excessive moves, obviously.
no, but there used to be a time back in the old days where if they knew that the importers had a lot to do, they would send out a few submarines and keep dollar yen a bit low to give them liquidity, or if the exporters needed to sell, keep it a bit high. Especially in those days, the exporters, because dollar yen was gradually going down all the time, keep it a little bit high. Buy some ETFs, buy some Nikkei as well to underpin it for as long as they needed to do their stuff. But it does seem that they moved away from this, and looks like they're just letting them do. Well, no, because I don't think they are there, because it's just so gradual, and no, I don't think they're involved right now. I'm just taking the bet that they are not, that they are letting the market do.
Yeah. So yeah, we're on price watch. You know, if we see 161s trading today or higher, you know, the higher and faster it goes, the closer we get to intervention, and that's the way you got to view this at the moment. And I'm still potentially interested in buying an intervention dip. The only risk is that obviously that would be a real pissing into the wind move by them, given where the economy's at, where the BOJ's at, and we're still climbing higher. So there is some risk that they may change tack, do something different, go a bit bigger, maybe go over a few sessions rather than just one hit and sit back. So there's lots of risks around it, but I've got a bit of an itch to get on the dip. But then I suppose a lot of people are looking at that as well.
I trust so. For the time being, as you say, they're still pissing against the wind. I'm just curious about the global dollar move for next month. But we can always do crosses if you want to counter something like one of the Aussie or the Kiwi or something who are perhaps interesting for Mrs. Watanabe sons and nephews. If you want to steer away from the dollar side also, but yeah, for the time being, it is the case. And then, but I would say, time may, if you buy it, and I may do it as well, you know, then we have to look at it time wise. I would say like second half of July, unless we get some seriously diverging US data in the meantime in one or the other direction. But I think time-wise, I think second half of July we may need to be a bit cautious, because there is now really for me a serious potential that we are going to get a double whammy on the Bank of Japan in July. Like that is hike rates and reduce the bond buying.
Yeah, and that's they've touted that it's going to be bigger than many people expect when they cut their bond buying. And no doubt we'll get various sources, pieces, either backing that up or not closer to the time. So yeah, if you are looking to buy an intervention dip, be prepared that, as Kay says, second week of July or 2 weeks before the meeting, you know, things might change.
Actually, for I think the first meeting is 11th of July. Regarding the bond reduction program. So the first meeting with market participants is 11th or 12th of July.
Yeah, cool, mate. Thank you. Right, let's move on to Australia, and more bad news for the RBA. We had some consumer inflation expectations, which jumped as well, up to 4.4% versus 4.1% previously. So it's all the Australian press. Some of the Australian press are saying that they need to hike again in August. So the pressure is coming onto those guys over there, which may keep the Aussie bid a touch. Over at the Riksbank, they kept their policy rate unchanged at 3.75% as expected. There may be a little dovish tilt. They said the policy rate can be cut 2 or 3 times in the second half of the year. Correct me if I'm wrong, Kay, but I thought they were just pumping twice in their prior meetings, and now it's 2 or 3. Is that
sorry, on the what?
On the Riksbank, I thought their prior guidance was that they may cut twice in the second half of the year. Now it's 2 or 3 times.
It was a bit of the report was like, I would say, get ready because we are going to cut. And whether it's 2 or 3 times, we saw the forecast for inflation have been revised a bit lower, but then countered with a slightly higher GDP forecast. It's a mildly dovish one, but still cautious. It's certainly, you know, if you compare to all the rest of the central banks, it's one of the more dovish out there, I would say.
Yeah, very much
in general, light.
Yeah, we had a little bit of reaction over that. Obviously, on the more dovish side, not a huge move, but again, just plan the calendar, but plan the amount of hikes this year for the Riksbank. Moving on to the clowns at the ECB. ECB's Ren says he always knew inflation would be a bumpy road. It's a shame they didn't know inflation was going to kick them up the arse a couple of years ago, but they're all experts now, of course. ECB's Panchetta said we're at a turning point in the European monetary policy cycle. The ECB should avoid even casual forward guidance on the timing of rate moves. ECB's Casimir sticks two fingers up at those comments, saying we should await the September outlook to decide on rates, and we can expect one more cut this year. ECB's Kazakh says no need to rush with monetary easing. We will take cuts step by step. Over at the SNB, we know who the new bod is going to be. Martin Schlegel is becoming the new chief. Antoine Martin will be vice chairman, and Petra Shudin, if I get that right, who was previously an alternate member of the governing board, will join as a governing board member. Schlegel was out with an initial comment after that announcement, stressing the commitment to the price stability goal for the SNB. Not really giving much away there, but do you know anything about this bloke, Kay?
The second one, the second and third, no. Schlegel is a continuation play, I think.
Yeah,
he's been there with Jordan all the time, or most of the time. So that's a continuation play. So I'm not expecting anything specific from him now. The other ones, I don't know them. I don't know whether they were. I haven't looked it up whether they were at the SMB already for a long time, or have been planted there to keep an eye on Schlegel, perhaps, and or hide his buttons if he wants to press them. I'm not sure. But it did have just a very, very tiny reaction, nothing at all. Really, 5 pips or so. So that's really the continuation play. Yeah, so from that side, nothing new really now. What I would say though, on the Swissy, is that over the past several months, we have seen Swiss demand every month end, and by now it started already to mildly show up several months, and right now it's staying very quiet. So perhaps there is little to do on the Swiss side. They can of course wait for the last day and we see a sharp move tomorrow. But where it was possible that we saw some Swiss buying again, because if you look at the differentials on the equity markets, the SMI is still very much underperforming stuff like the S&P and things. It seems to either wait for the last minute or show up a lot less than prior months. So that is one of the findings that I had on the Swissy this month. But S&P, no. Moving on, and we wait. We wait what Schlegel will say, perhaps on the handover with Jordan.
Yeah, which will be in September, so we may not get too many remarks from him before then. Right, looking at a bit of data yesterday, we're looking at some of the housing data that came out. NBA mortgage saw another dip in the mortgage rate there, which should be helpful for homeowners, obviously. Building permits got revised higher to minus 2.8%, got revised up 13,000, so less crappy than it was initially. Still a negative number though over the prior month. New home sales dipped as well, bit of a funky one because it was expected at 636, dropped to 619. However, the prior month was revised up quite a chunk to 698, so that was good because it was revised up, but it just makes this month's drop even worse. So a bit of a mixed picture there. Overall, it's a soft number, whichever way you look at it. So we're just now starting to see something from the consumer side, shall we call it, the sales side, looking a bit weaker as well. Over in Mexico, the incoming president, Sheinbaum, said that deep fiscal reform is needed to guarantee resources needed for spending. Now, here's a comment you could read a couple of ways. It says there won't be a fiscal reform that translates into higher taxes for Mexicans. One could, as I say, read between the lines and infer that that means that there won't be higher taxes for Mexicans, but there might be higher taxes for non-Mexicans. But I might just be doing 2 + 2 = 5. But still, there are going to be some reforms coming. Germany has asked its citizens, its nationals, to leave Lebanon immediately. That comment was out yesterday afternoon. There is chatter that once Israel are finished with Hamas in Gaza, they're going to take on Hezbollah in Lebanon. So that could have a bit of an impact on oil markets just by proxy, even though it's still a bit contained over there. But that potentially widens the conflict up. You get Iran involved and all that sort of stuff going on. So just watch risk on those headlines. France, they're talking about the possibility of a unity government over there, something coming up with this left-wing lot going on to try and take on these elections that are coming Sunday. Doesn't really matter at this point. We're just going to have to wait to see what happens Sunday now, but that's what's being talked about over there, unity governments being formed by some of the parties. And that's it on the news front, as far as I can see. Unless K-Man, you got anything else to add?
No, I think you covered most of it. The rest is more like a lot of opinion pieces and stuff. We're still waiting for the announcement, the firm announcement of the South African government, the real composition. I think the market is really waiting, and we have a great update by Jeff, who is living in South Africa in our room. By the way, for those who are not in our room, that is one of the big advantages of being in our community, is that we have people from all around the globe, and people having boots on the ground when something is happening, politically or otherwise, in one or the other country. So yeah, as Jeff said, the market is really eyeing on which posts in the government the DA will get specifically. That could be the move the needle between positive and negativity in the on the rand, right? So thanks, Jeff, for that. And yeah, that is what we are still waiting for now. Ramaphosa wants to press it through. He kind of put a bit of a deadline and a bit of a fixed government proposal in, but so far I haven't seen the results of it. But that can drop any time. In real news, that's about it. We are very much not looking forward to the Biden-Trump debate tonight.
I am. I'm looking forward to it.
To me, it's a debate. It's a debate of losers on both ends, because it's very hard to give too much credit to either of them. But that's not trying to be politic, but just looking at who the people are and their state of health and other. How shall I say, convictions and things, you know. But yeah, I'm not sure whether it's going to be a big market mover. Algos will be all over it, but I'm not sure whether at the end of the debate whether the market is really going to listen to it. Angela, I think, is it 7 or 8 o'clock for us, Ryan?
No, it's 9 o'clock Eastern time, 9 p.m. Eastern time. So that's about 2 o'clock in the morning for us in the UK.
Is it?
Yeah.
Oh, wow.
I'm going to have to watch the replay. I'm not getting up at 2 o'clock to watch it, but I'm interested in it for comedy value.
Yeah, the only ones I'm getting up for is Bank of Japan at that time of the day.
Yeah, exactly. You'll have to watch it on first thing in the morning.
Yeah, and
when
then
I'm eating cornflakes.
Yeah, and Ali, regarding your dollar yen, I think it's 75.57, 58. If I looked at the charts, but then I'm out of memory as well. When I was trading the dollar yen at that time in Tokyo, it's around there. Give and
Yeah,
take 75, 60 or so.
yeah, and just while we're on that, well, same number, 75.53. I think that might be close to lows for the Bank of Japan yen weighted index thing they look at. Keep an eye on that. It's down at 75.53. I think that might be a new low, or might we call a 75.40 number. But that's something that they keep an eye on as well. And yeah, just go back to what Kay was saying about the chat room. It's fantastic when you get people. We have people from all around the world in our chat room. And if you're trading these markets, there's nothing better than getting that boots on the ground information, because you get this stuff quicker than what you'll see in the wires and in the news, and it does help make decisions for trading. So yeah, thanks, Jeff. If you're watching the show, thanks for that. And if you're not watching the show, why not? I'll have to ask him in the room if he's not watching, because he won't hear me then, will he? Right, moving on. Today we've got final Q1 GDP from the US, which is going to be really old news, unless there's a massive variation in the number here. As we're mentioning, we're just about to close off Q2, so no one really cares much about Q1 data anymore. We do get durable goods coming through though, so that's a bit of data that we might see a bit of swinging around on. So we will keep an eye on those numbers at the very least, and obviously jobless claims later on as well. And we get some more home sales numbers from pending home sales, and some wholesale inventories and retail inventories. Keep an eye on those because they do play into the GDP numbers. And as they're coming in for May, there may be a bit of an indicator into the Q2 numbers. So if there's negative inventories, that's a potential drag on growth, which will mean that maybe Q1 is not going to be, maybe Q2 may not be, or may not see the bounce some might be expecting. So that's all on the data front. So let's have a look. Well, let's start with the old Rand, seeing as a few of us trading at the moment. Still going the right way. Again, don't know how much of this is end of month stuff, how much of this is down to the politics. We're still expecting to hear all those cabinet positions and who's got what job and how good they are. Again, I have no idea about all the people who are running for this stuff. So that's where the views of people who live there can tell us, yeah, this guy's good, this guy's bad, so on and so forth. In the meantime, my still main level up here is 1850, but at the slicer that is on, we've hit this minor level 1840s, had a little look and come back down. Holding the 1810, let's put it into a bit of a shorter term one. Here we go. Holding above this 1810 is proving to be working well. Once again, had a little bit of a wishy-washy time, but now we're finding it as support again. That's what you want to see when the levels are breaking. You want to see them holding either as support as resistance. So 1825s, 28s, that sort of level is where we want to see the price holding, just to keep this momentum going, and then maybe we get a move further up. Kiwi is another one I'm in at the moment. It's breaking into 61s. That's good. I was long yesterday. I wasn't liking this move. I actually had my stops just below the fib at 60.70, and I decided yesterday afternoon to just pull them out the way down to 60.50 because I thought we were getting a bit of noise around the fix. That proved to be a wise move. Well, touch wood. So far, it's proved to be a wise move because I would have been ticked out overnight on my stop had it stayed where it was, and then I would have been banging my head on the wall watching it climb back up again. I had it in to this level at 80 on the way back down. So yeah, getting back above 61 is a good start, and I'll get the slicer on again if we get up towards this 61.30s again, and maybe we'll see it creep higher for that. What else? You guys have been a bit quiet. What's Ali up to? I know he's up to something. He's always up to something, that bloke. Dollar yen. Oh, you're juggling with hand grenades today, Ali. Long dollar yen 160.58. Stop loss 160.18. Your profit 160.88. Yeah, you've got to know the dangers, Ali. At the moment, this one's moving, pretty wildly. You've got to be careful when you're trading this. If there's a sudden big move, a sudden bit of nervousness, or a phone around, you might find a bit of a gap down, and then you might find your stop doesn't get hit at the level, but it gets hit at the first price that trades. So be very careful, mate. Be very careful. You also short dollar Swissy. I'll let Cayman have a look at that one. Give him something to do. What else are you doing? Long on Euro Sterling, 84.35. Yeah, that's doing all right at the moment. I'm actually short a little bit of this at 61, if I remember rightly. Again, just on the back of some end of month stuff yesterday over the F.A.C.E, and I might look to sit in this one for that election weekend, because I see there's more chances of bad news coming for that than good news. Maybe we'll see a bit of a sell-off in the euro late on Friday as people take risk off the table ahead of that. I'm not sure they're trading it just yet at the moment. Right, what else? Stocks. Let's have a quick look at the old stockies. Where are we going? S&P not doing an awful lot at the moment. It's mooching. It's holding support where it needs to hold support. This was a resistance point, and it's holding it as support. I keep banging on about this. Draw your lines. If you want to pick tops and bottoms, let the price action tell you what to do. So if you want to try catching a knife, that's your pain level. You can catch a knife into 54, 45, 50, whatever you want to call it. If you're below there, then you're potentially wrong, and we're heading lower. Top side, 55 is still becoming, or still is a bit of a resistance level after that fake out. So shorts, that's where you have some conviction leaning into, but you don't need to be wrong by much above that high. We're likely to be carrying it on. So again, yeah, if you want to guess what the market's doing, be my guest, but I'd rather let the price action tell me where the levels are going to show up and treat them accordingly. These are all just short-term levels. So, don't be expecting to sell 55s and it's going to go to 48 again. Take it in context. If you get a move down, to 54s, maybe down to 53.90, that's where you should be looking to take some money off the table. Don't be expecting big things from small price moves. Right, Kate. Yes, mate.
Yeah, while keep it on there. While you're on there, there is a bit of noise going in of models doing the rounds, saying that there may be quite some big rebalancings to do between different equity markets worldwide, because there have been some really decent distortions, especially of late with those European ones, of course. So if you're trading equities tomorrow, and I would even look at bonds, because we've seen this rally in the yields yesterday, and I kind of suspect it may have to do as well with end of month, end of quarter rebalancings, perhaps. So be a tad careful when you trade bonds and equities tomorrow, because it may look like something, a driver for something, but it may just be like a pretty decent rebalancing. And some of the models are calling for third largest rebalancings in history or so. So it's always the next biggest thing ever. Like we have seen the option expiry last week being a completely wet sprocket, where it was supposed to be the largest one ever. But just keep an eye on it, because we are end of quarter, end of half year as well. So it may just drive things around, and do not be surprised about moves. That's really what we need to keep in mind going into tomorrow, equity and bond markets specifically, I would say.
Yeah, thank you very much, mate. Last one I look at is cable. I nearly had a little nibble down here towards 126, but I'm just, don't know why, I'm just not keen to get in too much at the moment. But we had a little test close to it, and then we've had a little bounce. Still looking a bit weak. We've got a bit of a downtrend going on here at the moment over the last couple of weeks. That 127 level is now key. So watch for any moves up towards that zone. If we can't get through there, that will keep this little downtrend intact, and maybe we're going to head a bit lower after that. That cable's looking a bit interested, but it's also looking a bit, despite us saying it's been holding up pretty well, very short term, it's looking a bit on the weak side at the moment. Right, Mr. K, I'm getting it over.
Okay, so first one to look at today is gold. It was looking very fragile yesterday, and there again, these metals, there are fixings there, but nobody ever knows what exactly is going to happen. But I do think that yesterday and the day before we had we may have seen a bit of end of month, and then of course a reaction to higher yields. But we have to note that it's a bit cold below 2300 again. So I'm not adding to anything. I'm long, but my average is still, well, actually we're getting a bit closer now. My average is still a bit higher up. It's small. My risk is contained. I was trying to look at getting a little push lower here yesterday into the 2280s, where I was probably going to add. I didn't get it, but now it's like moving up again. This is one of the other ones that we cannot rule out much into end of month, end of quarter. But the fact that we start to move up a little bit, despite higher yields, is perhaps encouraging for those who rather look at the long side of this instrument. But I mean, we are still in ranges, right? And we saw lower highs indeed. Those who look at technicals, we did see lower highs into the second part of this month. So yeah, be a bit careful. But I keep a smallish in there and see what happens over end of month. And just to say, this is one that I'm going to be extremely interested in for the second half of this year. And I've updated our chat room as well on that. It's one that I think could go for a walk again if the US data would start to show a bit more weakness, because as I already said on the shows, the dots are forcing the market to reprice again. The dots were perhaps not completely reflecting the last CPI number. We still have Mrs. Yellen needing to fund a lot of debt, but get a weaker employment data, and I think we may be a lot closer to Fed action than what the market is forced to think right now. So this is one that I'm going to keep a very close eye on in half two. If the jobs market is holding up, I will need to revise my whole plan, and that's what a plan is for. I mean, we have a checklist, so we revise it from time to time. But this is one that I'm going to keep a very close eye on coming second half of this year. Yeah, you were asking about the Swiss franc. Okay, I already said what was happening in the prior months. Okay, there is a bit of resistance around this 89.90-ish. But I think for me the biggest level is still going to be 90 here. That 90, 10, 20, 25 on the dollar Swiss. If we get back above there, I think then we are going to continue higher. But again, ahead of the into month end, I really don't know. If we don't see too much action today into tomorrow morning or so, we should have the hint if people need to buy Swiss. It may just be that this one is going to hang around here. Models are calling for a bit dollar selling, so you may be doing okay, Ali being short here. That is what I have to say about the Swissy right here and now. That on the Swiss, yeah, the Aussie. So yesterday, as per plan, I picked it up. I was hoping to get like 66.30 or even low 66s into that fixing yesterday, but we didn't get it. So I picked it up around fixing time. As usual, what I do when my positions are not meant to hold for longer or whatever, I've already started to slice just a little bit, and just to keep my account happy and have like really contained risk. But I think into tomorrow, this is a candidate also looking at the equity divergences that has the potential to go and have a look up at that 67, 10, 15 perhaps. Again, look at the range. We shouldn't be expecting too much here either. And if by any accident we break 65, 80, 85, I wouldn't be long anymore for this. Okay. Yeah, silver. I was trying to pick it up in the low 28s, but for the time being, that is not really happening. What else? Did you show the dollar rand? Yes, you did.
Yes, mate. Yeah.
Yes, you did. Yeah, dollar CNH let a little tad go yesterday of my longs just to keep the bank happy as well. And as I said, I had a bit of a zone here, small one into the 731s. Also, looking at the latest move, it's always good to bank a little bit. And with the perhaps end of month in dollar moves in mind, I just let a little bit go. If I get a little bit lower, I will for sure buy it back there as well. Looney, yeah, that one is actually pretty big. Ryan picked it up really well on the Canadian CPI. 137, I would say though here, 137.05 all the way up to, or not all the way up, 0520, relatively important. You could also draw a trend line, but that's going to come in a little bit higher. But I'd say 107. 0520, that's a level to monitor, and then if it caps again, and again with month end perhaps in mind, a revisit of that 136.5 possible, even low 136s are possible as well. All depends on what's going to happen in the next 30 or so hours. I had another one that I wanted to show, but I forgot about which one. Anyone having anything else? Oh, yeah, I did show the cable, did I? Or I didn't? No, picked it up yesterday as well. A few in the room did. Around this prior low here, 106.20s, had a bit of that fixing move and picked it up. Okay, Michael, I picked it up there as well. I'm looking, as Ryan says, don't expect too much either. If we get a move up into the 127s come tomorrow fixings, I'll be a happy man. I'll be a happy man as well. And the risk is relatively clear, I'd say. If we start to get back below this 125.90, 125.80, it's perhaps useless to keep it in the meantime. Let's see what happens there. The dollar mix is a bit of a strange one because I didn't see too much of a reason, unless I missed some news for this pretty steep move higher again. But we are watching again this zone here, right? Anything between 1835 and 18.5, 1852, 53. That is where decision time probably for the shorter term go through it. We could be back at 19 very quickly. Cap it. Oh, by the way, hang on a bit. We have the Banxico today.
Yep.
Good call, Michael. We have Banxico today.
Yeah, I forgot about that one.
Yeah, be careful because it may be that due to the recent weakness of the Mexican peso, they will be tempted to keep their interest rate unchanged. Also, with the US being on hold for longer, that will keep their interest rate unchanged. But look at what they say. Okay, if it's really due to Mex weakness, I wouldn't buy mix on the back of it, because it's always dangerous when a central bank does something because of the specifically because of the currency. Okay, so watch the statement. All right. If it would cap, then we can go back to low 18s perhaps, and move back to below 18. But look at this zone here. If we would ever go back here, this is going to be an important one, in my opinion. Anywhere 1780s down to 1765. This is, to me, going to be one big support now, especially keeping those politics in mind. We still don't know what Scheinbaum is really going, or when she's going to really press reforms through with AMLO, unless I missed something. But yeah, it's all going to be about politics and how the Banxico is reacting to them, actually, on the back of this Mexican peso move. And Ryan, that's it for me. Back over to you, mate.
Thanks, mate. What time is Banxico? I'm just trying to find
7 p.m. our time, 7 or 8 p.m. our time, 8 p.m. our time.
Yeah, it's not on
7
the
p.m.
calendar.
GMT.
Oh, there it is. Yeah, 8 o'clock. 8 o'clock BST. Yeah, unchanged at 11% expected.
Yeah,
So,
I'm just, Michael, I mean, if you're long, not sure if you want to hold it through Banxico. If you can slice it, why not? And then you, if they do something, move the rates, also you're going to be laughing with the rest of your position if you can slice it. Or if you want to err on the safe side, yeah, take a piece off, and then you will be feeling a bit safer, and you can withstand an immediate move, perhaps, if they would impact things. But I mean, I'm just saying what I would do. I mean, it's never investment advice what we give on our shows. Okay.
yeah, good advice indeed. If you've got some profit, you know, you can take, as you said, take some off, bring your stop up to cover the, you know, let's say you cut half, bring your stop up to cover the other half, so it makes it maybe a zero trade or slightly in profit if you do get stopped. And then you know that if the market goes against you, at least you pulled some money out of the pot. And you never go broke doing that. Thank you very much, Kay. Thank you very much, boys and girls. Have a great day's trading, and we shall see you always. We always do tomorrow, Friday, Beer Pips Day. Looking forward to it. Have a great day, everyone.